Hey everyone, this is Jordan with Conquer Trading Investing. If you're new here, welcome. And if you're not, welcome back. Today, I'm here with a man that needs no introduction, Benjamin Cowen from Into the Cryptoverse. So I before we recorded last time, I really kind of liked how we were kind of just looking at charts together and really liked the whole vibe of that. So Ben, I wanted to talk about some things with you since last we spoke, which was, I think it was in October 2021. My expectations at that particular point in time was around that fourth quarter 2021 that we were headed towards a blow off top, a cycle top. Bitcoin topped at $69,000. It brings up many questions.
Yeah, I think a lot of people are expecting it to go much higher. In 2021, I was even thinking it was going to go higher in like this year, right? Especially back then. And I think it kind of took a little bit of time to realize that it was actually all coming back down, And I think the biggest question was, with 69K and in terms of like diminishing returns, right? That was sort of the talk of last cycle. Would we see diminishing returns? Would we not? I always thought we would see diminishing returns, but the extent to which they diminished, I think kind of surprised me and surprised a lot of people.
Yeah, that's exactly the bullet point I had over here. I think that diminishing returns was obviously a base case of yours, but to that extent, surprised a lot of people. That was, drastically diminishing returns. And that brings up some questions. Has the overall market dynamics changed of that, right? Are we looking at now with that double top? Are we looking at more resistance above? Is that going to create problems going forward? Or once we clear that out, does that make a greater base for the next cycle?
My personal opinion is that eventually we will clear it and we'll head much higher. I think the biggest question I keep like debating with myself, sort of like an internal dialogue, is what is the timeline for that to actually occur? And I've actually tried to learn about what other people think a lot, kind of like see where they're thinking things are headed. And you'll find opinions that range from basically Bitcoin heading all the way down to $3,000 and spending 10 years to get back to new highs, versus from on one side of the spectrum, and then the other side of the spectrum is we've already bottomed and we're going to be heading up now. I think I'm kind of in between. I don't think Bitcoin's going to go anywhere near $3,000. I certainly don't think that, but I do think that 60K level is it could provide a significant level of resistance during the next bull market, because we spent so much time there in 2021. So that is a concern that I do have. If you look at the chart of gold and stuff, and whatnot, you can see kind of similar, big double tops separated many years apart. So I think the bigger question for me, and kind of something that I've been focusing more on this year, and I know this is something you talked about a lot in 2020 and 2021, is sort of the macro, the Fed. Is the Fed on our side or not, right? And with the Fed pivoting this year, and markets pricing it in late last year, it certainly has sent us much further down. And I'm thinking about sort of the next bull market and thinking about it in terms of the Fed. The Fed needs to play ball with us, right? You think back to March of 2020 when markets crashed. Would we have come out of that had the Fed not printed like crazy? Probably not. We probably wouldn't have, but the Fed saved us, right? The Fed sort of propped markets up again. So that's sort of what I'm looking for the next cycle, to determine whether how strong resistance 60K is probably where the Fed stands. And I think the bigger thing is going to come down to where inflation is. Like, if inflation is transitory, right? I know there's the Fed got a lot of grief for saying the Fed, that inflation is transitory. But if inflation is transitory in the sense that it's only around for another 6 to 12 months or something, and then it comes back down, then I think we have a much stronger case to break out above it. But if inflation sticks around like it has in some prior decades, then maybe 60K will provide a lot of resistance.
Yeah, I wish it was. I wish it was as simple as something as, for example, as lengthening cycles and diminishing returns, or 4-year cycle blow off top at the end of the cycle, and really it's very complicated. And I think that as the market grows, as the asset grows, that really the Fed and macro really form these cycles a lot more than maybe they have in the past. And maybe in the past, really, this was always never a 4-year cycle and more really all about the macro. But I think that in the past, there were a lot of dynamics, such as the halving of the miner's reward, which created supply demand dynamics that contributed to these moves on Bitcoin, right? And I do remember the whole bull market of Bitcoin saying that the greatest risk to it wasn't Tether, and it was really the Fed and Fed's policy. And I think that in real time, as we saw the Fed move toward tightening, even though that it might have been recognized that the Fed was making a pivot here, it was still very difficult to get right in real time. And that's what I want to do right now, is work towards us being able to have a little bit further clarity to help us going forward, because I don't think it's really so much about the cycles as we've defined them maybe in the past. And I think that we're looking at an evolving market. And you mentioned some narratives. For example, Bitcoin is an inflation hedge, and many people right now probably would say, well, that obviously not. And I think that's also difficult, though, but only because if you look around, like, what happened was the Fed changed policy and began tightening. But if you look at the cost of Bitcoin relative to inflation going back over a 2-year time frame, I mean, it has provided even still a significant hedge against inflation. But Bitcoin is many things to many people, right?
Yeah, well, I think the narrative of Bitcoin changes every cycle as people try to figure out exactly what it is and what it provides. It doesn't mean it's any less valuable over the long term, but I mean, if you think back cycles ago, I mean, it was more so like a peer-to-peer currency. And now it's not really shilled as that anymore, because it's really not that likely that I'm going to go use my Bitcoin to go buy coffee or something, right? I'd rather just keep it. And the whole inflation narrative. I mean, I think to some degree, I think it is. You could argue when inflation is at normal levels, like 2%, somewhere around there, Bitcoin can do quite well. It's just that when inflation gets too high, as we've seen in the 70s and the 40s, I mean, the risk assets just don't do that well. And it's not necessarily just because of inflation, it's because we know the Fed's going to do something about it, right? And they're going to tighten policy, and that's what they're doing now. And I mean, I think a lot of people spend an entire decade saying don't fight the Fed as they just printed us into oblivion. And my thoughts this year are just don't fight the Fed until we really go back to at least where we're no longer raising rates, and maybe back to a period of QE. I think we need to still be cautious.
Yeah, I mean, the Fed's running the show. There's no question about that. We talk about narratives come and go, and I want to talk more about thesis and long-term thesis. And for me, that's Bitcoin is a hedge against currency debasement. And I just want to visualize that for you. I'm going to go ahead and share my screen and bring up some charts. All right. So Ben, I know that a lot of people, myself, you, almost everyone in the space has looked at Bitcoin relative to M2. And some people might have looked at it like this and said, oh, well, something was different over here. Bitcoin over here has never before, when viewed in relation to M2, taking out the previous cycle all-time high. And that was almost like an alert, maybe something different is going on. And since then, price is also taking out that previous all-time high. And I'm not so sure that's the correct way to view it. I wanted to really get your opinion on this. Allow me just a few minutes to present to you so that you could take it all in and then let us know your thoughts on that. And one of the main differences here between M2 is that M2 is basically, it's a measure of banks' balance sheet. It's all bank deposits and currency in circulation. And you can see that's constantly going upwards over here. Let me go ahead, and it just keeps growing and growing and growing. I mean, it's a fractional reserve debt-based system. It makes sense that it will continue to rise in the long run. The difference between what I want to talk about is the monetary base, and that is including banks' reserve balances at the Federal Reserve, which is a component of base money. And this is bringing it back to me saying, well, for me, really, my thesis is that Bitcoin is a hedge against currency debasement. So let's look at it in that view over here. And we could see over here, this is just the monetary base total. And we could see it looking back over the last 10 years. And a couple of things really stand out over here. I mean, this was a really big run on Bitcoin. In the 2013, we see as the monetary base has expanded, another big run. This was a huge Bitcoin bull run over here, and we could see the base is expanding. So, but something else is different for sure happening over here. And then we come back to this area over here as we've recently seen the last bull run, and we see that the base was expanding again. And we also see, unlike looking at M2, which is going basically up and to the right, we see that we have ups and downs here on monetary base, including the monetary base right now is contracting as Bitcoin is contracting. We see that over here at the top of the 2017 bull market as the base started contracting, and so on and so forth, right? So we could view these two together. This, instead of viewing M2, is viewing the monetary base total, and here you could see them coming down in unison, right? This is, you were pointing out, the Fed pivoted in policy over here towards tapering and then tightening. And we could see the 2018 top over here. And I think it warrants a little bit of a further thought. And, you know, we could view it just in this one area over here where that bull run occurred in 2011 over here, the 2013 bull run. And, you know, I want to go ahead and continue over there. There's the 2013 bull run. The monetary base is expanding. We have over here that 2000s, January till all of January, when Bitcoin and crypto really ran. You could see the base really running, and then to where we are recently. So makes sense that maybe there's something here to kind of discuss a little bit more, dig into, because I think what I'm trying to achieve here is push narrative aside and look at what is the greater thesis in play over here. And could we say that now there's a lot of nuances here, and there's nothing, it's not like, okay, when the monetary base starts increasing, that's the time to come into the market or anything like that. And I'm not trying to give anyone or you any type of clarity to that extent. I'm just trying to go ahead and push away a lot of other things and maybe focus our attention on where it belongs. And we have over here, you could see, and you're familiar with these moves of the of Bitcoin, but you're looking at the monetary base, and it looks very similar, right? So I just wanted to show you that from where we peaked right here in November, right? We've had roughly a 13% correction in the monetary base total, and Bitcoin off. This is 68%. This is on a monthly close we're looking at, even though the chart says daily. And then coming back over here to the top of 2017 December. And again, the monetary base coming off, relatively similar, 12.5%. And again, the correction in Bitcoin was also roughly the same. So what are your thoughts on that?
Yeah, I mean, I think, thanks for the charts. I think they're interesting. And I think to me, it shows that and this is sort of something I've always sort of thought, as I think you're aware. I've not always been so convinced that it was simply like just the halving that, that led into Bitcoin's bull markets. And that was why I always had a hard time just measuring Bitcoin's returns from just the halving, because oftentimes Bitcoin would bottom well before the halving, and I preferred to measure it from there. So I do agree from one of your earlier comments that the market does appear to be evolving to some degree. It doesn't mean, though, that we can't have another bull run, right? Like into the next halving, right? Like that could occur. But I think we need to see these charts that you presented to actually go back up to the upside, right? I mean, like if these trends are going down, if the Fed if they continue sort of draining liquidity out of our system, which these charts are showing, if that's what they're continuing to do, then I don't really have any strong expectations for Bitcoin in the short term. I mean, I'm not saying, and I mean, you're probably better at this than I am. No, I'm not saying that Bitcoin can't go back up and have another 20%, 30% rally from here. Like, I don't know. I mean, it certainly could. under certain circumstances. But I don't think that I don't think that a new all-time high is part of the conversation right now when we're looking at charts like the ones you're presenting.
Right.
I think it becomes a conversation once those charts start to go back up to the upside, but they're not going back up to the upside right now, right? And there's not really any clear indication to me that they're gonna do anything. I don't think there's any clear indication to me that they're going to start going back up anytime soon. I think the things that I'm looking at right now, and I'm looking closely at what the Fed's doing, and the Fed has been ridiculed a lot over the last year for really failing for potential policy error in 2021 and not becoming more restrictive sooner. I mean, they honestly probably should have become more restrictive sooner than they did, and had they done that, we might not have even seen the November peak. We might have just been done in April of 2021 had they pivoted when they should have, arguably. And they didn't, right? And they kept the party going for a bit longer. So now I'm looking at it and I'm wondering, what's actually going to get us back on track in this whole idea with monetary debasement. I think it's I think it's an interesting idea, and it surely could fuel the next narrative. But I don't know what is going to cause them to turn the printers back on in the same way that they have before. I think it's. I'd like to know what you think about it.
Yeah, that's kind of why I wanted to present this all to you. I don't have any answers here. I'm just adding to the conversation, and I highly respect your work, and hopefully it just plants a few seeds that maybe you and your team are able to build off in the future. And I think it's complicated. And I think that the only observations that I could really make before I go back and answer that question directly is that it's clear when the monetary base is being expanded at that point in time. That's almost like, that's when we're about to see a really strong run on a bull market. However, it's complicated and it's very nuanced. And that part is almost the only easy part. Because we've seen, for example, if you see over here, Bitcoin off of the bottom, January 2019, it puts in a 4x, and the monetary base is still being contracted over here. So what happened over here, and what is different? And again, just to kind of make it a little bit easier for people to understand what I'm saying is I think the up part is very easy. The part where you're seeing the monetary base really expanded, I think that part's easy to get correctly. But by the time that happens, you might have missed the significant opportunity to be accumulating Bitcoin. And what do I mean by that? Well, I just showed you that example where we saw Bitcoin move a 4x in why the monetary base was being expanded. But something else was going on in the period after. We see the monetary base rising. Let me pull that up for you, Ben. Over here, we see the monetary base from September 2019 rising. This is when the repo market broke and the Fed had to return to balance sheet expansion. And Bitcoin during this point was just consolidating. It was not moving up in unison with the monetary base being expanded. And now I think the reason for that personally is because we were in a bit of a crisis. The system had broke and the Fed needed to stop QT and it needed to begin balance sheet expansion. Bitcoin at that point was more or less sensing that things are not right yet in the market, right? And then sure enough, about 6, 7, 8 months later, we saw the global lockdowns, and then we saw the Fed really act, and that's when Bitcoin did its thing. So I guess what I'm trying to say is it's very complicated, and I'm not trying to all of a sudden, share something that everyone all of a sudden has the holy grail or anything like that. I think that you already hit on what really is the main factor, and that what is the Fed going to do next? And right now they're tightening, and it doesn't seem like they're about to, at this point in time, pivot towards balance sheet expansion, towards a return to quantitative easing. But at the same time, are they going to pivot towards a pause in rate hikes by the end of the year or into early next year? That seemed to really be the catalyst to send Bitcoin off its bear market low, December 2018, towards that 4x, because quantitative tightening was still running. there's not any clarity for me to bring there. I think it's really complicated, but I do think or see that overall what we're looking at over here is, I don't think it's a narrative. I mean, Bitcoin, is a hedge against currency debasement, but the monetary base is not always being debased. And right now we're in a period where it's not. And by the time they start running towards expansion, Bitcoin could be trading significantly higher or lower from where it is at right now. So,
yeah, I mean, the bottom usually comes in well before they, we actually, it's more apparent to maybe say general markets that it should be, right? I mean, it's sort of like how in a recession, the stock market bottoms, like 2/3 of the way into the recession, not at the very end of it. And by the time governments are declaring it a recession, usually the recession's already over, I remember that move in 2019, and I actually think it caught a lot of people off guard. I know it caught me off guard. I think to some degree that period also in late 2019 where Bitcoin was moving down. I mean, one thing to consider is that the chart you showed with regards to monetary debasement, the stock market was putting in new highs, I believe, in late 2019. To some degree, you could just argue that cryptocurrency, it needs like perfect conditions to really go to really shoot up, right? It needs cheap liquidity. It needs a Fed to play ball. The S&P, say like, tech stocks, the S&P 500, that sort of stuff, you see it not require, I think, nearly as much of these sort of ideal conditions to necessarily do well. And look at the markets right now. The S&P's down 15-20% from the all-time high or something, while Bitcoin is down 60 to 70% from the all-time high. So yeah, I think to some degree, Bitcoin, I mean, maybe if you could argue if it since something was wrong or not, but I think that it requires very specific conditions to do well. Access to cheap capital, and also a narrative. I mean, you have to have a narrative there. I mean, there's a lot of assets that exist that never do well. There's a lot of altcoins, right, that never even see new all-time highs, even though there's access to cheap capital. So you do need some type of narrative to push this. And I think for the next bull market, in terms of trying to figure out, everyone wants to know where the bottom is, right? Like, is the bottom in yet? Is it not in? It's only ever going to be known in hindsight, of course.
Yeah.
It's going to be almost impossible to call on the exact day if the bottom is in or not. And I mean, 17.5 could be the bottom for a long time, and doesn't mean it's the macro bottom. If conditions remain poor for an extended period of time, I think we could see a lower low, and not only in crypto, but also the stock market as well. So yeah, I mean, I think in 2019, there were some other narratives going on, I believe, in China and whatnot. I can't even remember the name of that thing that was going on back then, but something else was there were a few other narratives being sort of pushed back then that I think arguably helped Bitcoin to get up to those levels. But I mean, in the grand scheme of things, if you look at 2014, 2015, you look at 2018, 2019, I mean, they're just a bear market / an accumulation phase before the next bull. I think.
Yeah, that's very important. I mean, in 2019, really after that 4x run, you were looking at a very healthy accumulation, a very healthy range. I know that actually the global lockdowns accelerated the move to the downside, but you could argue if that didn't happen, Bitcoin would have been just in accumulation phase before the next bull run. I think that's what was happening. And so when does that happen, and when does that look like? Of course, you're pointing out that's really dependent on the Fed and equity markets. I mean, if we see tomorrow's CPI come in soft and then all of a sudden that narrative is changing and this wall of worry is climbing, the S&P 500 is a stone throws away from back to all-time highs. And during a tightening cycle, that often happens. It wouldn't be let's say uncharacteristic to see equity markets return to all-time highs during a tightening cycle.
Well, look what happened in 2018. I mean, the S&P hit a new all-time high in like what, the third or fourth quarter of the year, and then it put in a lower low later, like at the end of the year in December.
Yeah, when QT was going similar to that's
right, exactly. So yeah,
rates were rising, and you saw the equity markets really come to a strong correction. And
Right. So yeah, I mean, I think the, you know, the S&P putting in a new all-time high is probably going to occur before Bitcoin does.
Yeah, yeah.
I don't even, I'm not even sure that a lot of people would argue against that statement, honestly.
Oh.
I think it's almost a given that the S&P would put in a new all-time high well before Bitcoin.
But in your view, is it possible that if we saw, you know, equity markets work towards all-time highs and the Fed pause, because the pause back in January 2019 was the rate hike pause was the catalyst for Bitcoin to really rally. So would it be possible if the Fed pauses that, you know, call it in January 2023, that we see Bitcoin make new all-time highs before the halving? And if that happens, is that lengthening cycles actually in play? Or?
I don't think so, honestly. I mean, and I say that as someone who used to promote, like, you know, I was very adamant. Like, I thought that, like, I mean, if you remember my original thesis, right, it was that Bitcoin would hit 100K in 2023. Like, I always thought like 2023 is the year, you know, that it's going to happen. And until then, it's just a longer cycle. But I think once I sort of got the sort of the goggles off my eyes, or the Tenta glasses, right, where I was only seeing it one very specific way, I look back and I mean, you know, back in Q1 of this year, when it became apparent to me, I mean, it became very apparent to me that, you know, cash was king, right? And I mean, I've just been sort of saying that for a lot of this year. I look at a lot of the metrics for Bitcoin. They're either all in the process of resetting or they've already reset, right? Like so there's no way, in my opinion, that I could with a clear conscience say, if Bitcoin does go to 100K in 2023, which is probably not a very, very likely scenario. It could happen, right? I'm not going to say it can't happen. Anything can happen. Think about what Bitcoin did from March of 2020 until April of 2021. It went from 3,800 to 64,000, you know?
Absolutely. Yeah.
So, I mean, like, anything can happen. And, you know, if the Fed turns on the money printer again and they just say, well, whatever with inflation, then it could easily happen. But I wouldn't actually consider that a lengthened cycle. I would more so say that it's just a fresh cycle. And that while we got to where I thought we were going in a certain year, it certainly wouldn't have been the way that I thought we were going to get there. I think that the most likely scenario is that 2023 is most likely going to still be an accumulation year for the next bull market. But who knows? I mean, I don't.
It's really tough. I think it's complicated because we don't know what happens in 2023. Does the economy be able to continue to climb this massive wall of worry? Whether you're talking about the situation in China, or whether you're talking about the energy crisis going in Europe, whether you're talking about the domestic Fed policy of tightening, or does the economy continue to deteriorate? The job losses increase, and then the Fed have to move towards cutting rates. And does that put massive pressure on the equity markets and also on Bitcoin? Could Bitcoin go to a new all-time high and then really crash before the next halving, or after the next halving? Those things are all in play. I think we have to kind of more or less evolve from past behavior that's occurred in the market. That's the way I see it.
Yeah, I mean, I would agree. Anything's possible. I'm not gonna discount anything. I do know that you know, when they're raising interest rates, I believe it takes about a year for the economy to really feel it and to digest it. So I think the biggest concern right now, which I guess will ultimately be the answer, right, is, does the Fed go too far in raising rates? If they don't go too far and they don't send us into like a deep recession, then anything's possible, you know? Yeah. But I think the question is will they go too far and raise rates too much, too quickly, and send us into a deep recession? I mean, and no one really knows the answer to that question, I don't think. I mean,
well, do you think we're at a point in time where it makes sense to return towards accumulating? Have you returned towards accumulating? I know that you know, we're a big proponent of being and building up cash reserves and a cash position.
For Bitcoin, I think Bitcoin, I think for Bitcoin, and I'm talking about just crypto in general. I mean, my strategy for like the stock market is a lot more passive and not nearly as involved as it is with crypto, because I generally don't have the same fears with the stock market. Like, I don't think it's typically going to have like an 85% correction, you know?
Right.
So I don't have to worry so much about it. But with crypto, my my personal conviction is that this is the range. This is sort of the range that it makes sense to accumulate. But it doesn't mean we can't go lower. I mean, we could, but I don't think it's necessarily worth risking not having Bitcoin just on the chance that we do go lower. I have a lot of different indicators that I look at, and honestly, more of the indicators now are giving a point to the bulls than the bears. Like I mean, and what I mean by that is most of the indicators have reset or are very close to resetting. So I think it makes sense to accumulate Bitcoin. I don't think it, and this is my own personal conviction, I've gotten a ton of hate for it this year.